In this episode, I'm going to teach you how to lose money even if you buy a property for $1 in the Furlo Capital Real Estate Podcast, where we dive into the intricacies of passive real estate investing, where we teach people or we equip people to invest wisely, hopefully so they don't lose a dollar and then some, and so that they can build their wealth while improving housing, which we did accomplish that goal, so that's good. And I totally like...
Yeah, you lost your train of thought.
Oh, man.
Okay, wait. Did you mean to say you're going to teach people how to lose money?
Yes. I'm being sarcastic.
Oh.
Or dry humor, I guess.
I didn't get it.
See,
that's
the
thing.
Don't worry.
I don't get stuff like that.
Yeah. So it's the Furlo Capital Real Estate Podcast,
right.
where we...
equip people to invest wisely.
Yes. In both property and people,
Yeah.
so that together we can build wealth while improving housing.
Sure.
Yeah, that's what we're doing. Anyways,
we're-
I'm James. This is my wife, Jessie.
I'm here.
And I feel like this is a
No,
good
I'm-
start to what was a bit of a dumpster fire investment.
Oh,
So
okay. I see what you're.
That's the meta.
I see where you're
side.
going here. See, sometimes this wasn't my intro, but I can be vulnerable right now and let you know that I don't get jokes. I mean, I get dad jokes. I get really bad, like corny jokes.
That's true.
But if it's like dry humor or sarcasm, sometimes I'm just like,
Just tough.
why would you do that?
Yeah.
And you're like, I didn't. Like, it's
Yeah.
sarcastic.
So
You have to explain it.
yeah, so I'm going to explain this
sorry.
one. I'm talking about an investment where we lost money, which I don't want to talk about,
Wah, wah.
but I feel like I should
But it
because it's
happens?
important. Because some people would argue that now I'm a real investor because
Oh.
I finally lost money on a deal.
Did you
So
lose
that's
other
funny.
people's money?
No,
Okay.
I did not.
So that makes me feel slightly better.
Yes, I just lost my own money.
I mean, even if you lost money, you would pay your investors back
Correct.
what they put in, and then
Yes.
before you took any money yourself. So
Correct. Yes. And mostly because I personally guarantee all my loans. Sure. So, yeah. So we bought this manufactured home in Lebanon.
I remember it.
Yeah. For $1.
$1.
Killer deal. I remember I had to write a check. It was really weird.
That is weird.
And
For $1.
It was for $1.
Couldn't pay cash.
No, because they want to record the transaction, right? You need to somehow have a paper trail. So a check is how you do it.
All right.
And so I bought it. Can't lose investment, right?
Sure.
Because
You only spent $1.
yeah, and the
mean,
game plan was to
first.
spend some money fixing it up and then resell it for more than what we fixed it up for.
Sure.
And we had 1 month of the lot fee paid for. So the manufactured home is in a park, and you pay rent to have it there. Is kind of the idea.
How much is rent?
I will look it up. What episode we talked about this
It's
originally?
like, I mean, it's somewhere in the
It's
neighborhood of
like-
like $500.
Nope, $1,200.
What? Okay.
Yeah.
Wow.
So now you can start to get a hint for what happened here.
$500?
That's what it used like. That's what rents used to be
Oh.
for lots. That is not the case anymore.
Wow.
Like 500 is like a really cheap place.
$1,200 for monthly rent.
Yes.
Yeesh.
Yeah.
Okay, so you bought this place for $1.
Uh-huh.
You had to keep paying the $1,200
Yep. Every
lot
month.
fee
Yep.
or rent or whatever,
Mm-hmm.
and you put some money into fixing it up.
Yes.
So you're gonna give me like a grand total here.
I,
I'm like,
of
oh,
course.
I can see where this
of
is leading.
Of course. So I was looking at the numbers recently. I know I got to figure out what my total is, but essentially we spent like $25,000, maybe a little bit more than that, fixing it up. And we did all sorts of stuff. We repainted the inside. We redid the flooring. We redid a bathroom because the tub just needed it, and it's a non-standard size tub.
Yep.
We ended up doing a bunch of trimming of the landscape around. We cleaned the outside.
Oh,
We
I know which one this is. You like take a bush out.
yeah,
remember that.
That was one of the things.
Okay.
We removed a ramp. We had there was a plumbing issue that we resolved that I actually crawled under the house and resolved. And those were the big things. Oh, yeah, we painted. That was a big one. Oh, and we put all new appliances in there because the old ones were old.
Yeah.
Yeah. And so the idea was like fix it up in a month because we had that 1 month free lot rent free.
Sure.
And then get it on the market and sell it.
Yeah.
And our initial underwriting was that we could sell this thing for $45,000. That's a great deal, right?
Assuming someone buys it.
Yes. assuming someone buys it, is great. Well, first problem that we ran into was the repairs took a lot longer than we thought.
Oh.
Yes.
So
and by the way, because it was $1, we were just using our own money for this because that would be really weird to reach out to investors.
Give me $1.
We could have asked an investor for $25,000, but we had the cash at the time, so it was fine.
Yeah.
So, so that was what we did. But because it was a smaller job, the guy who was doing the crew did not prioritize this building, and he didn't even like oversee it at all. He just like, just go do it. And so it took a lot longer. This was, when did we close on it? I think it was like October, November timeframe. And the place was not ready until March.
So 4 months of.
Yeah.
So you then owed 3 months of lot fees
we paid
on top of
3 months. Yeah.
Yeah.
And
all fixes.
Yep. And then.
And that was just to get it to the point to list it.
Correct. And I'm trying to think. Yeah, that was just to get to the point to list it. And then we listed it for 45. I think we had like one person who was interested and ultimately said no.
Interesting.
So then it sat and it sat and it sat. And then we decided that, interestingly, my partner, Lawrence, he doesn't have the right license for putting a manufactured home on MLS. And so they took it off. And so we were like, which we didn't fully know right away that was what happened. They were just like, yeah, super weird. We had it on Facebook, had it on Craigslist, that kind of stuff. We ended up lowering the price. And then we lowered the price. And then we lowered the price. Yeah. So we ended up selling it for $20,000 after it's sitting for multiple months.
Right.
The final total, we lost $14,000 after everything was done.
Lame.
It was
which is not
super lame.
A huge amount, but still.
I wonder, I don't know. Sure. That's a lot of money in my book.
I mean, it's not $1 million, but
true.
It's lame.
But yeah, what started out with a like can't lose.
Yeah.
Look at all these numbers. So what happened, right?
Yeah, well, it's two-part. Like, I want to know like what happened to get to that spot, but also like, is there anything you would do differently?
Yeah, the big thing was just our ARV. We totally we misjudged that. And
so
the other big problem was that it was a 55 plus community. So we actually had people who were interested.
Oh, but they didn't qualify.
They didn't qualify. And the lot rent was significant. That was the big thing that kept stopping people. We actually had it under contract twice. And they were just like, no, this lot rents can't do it. Yeah, we had it under contract I think we had it under contract at like 40,000, and then we had it again at like 35,000, I think.
Yeah. I mean, which kind of makes sense because it's like at that price, you would think your mortgage payment would be a lot less.
Oh, the other thing is we were offering creative financing as well, and which is what got us because we finally listed at 25, and we're like, well, okay, I want to lose a little bit of money, but whatever. But we're like creative financing, and then someone else came in and said, we'll give you $20,000 cash. And we're like, dang. So, because that was our initially the thought was like, hey, what if we offer it for 45 and we can do like 20,000 down, and then we'll take a note for the rest. Yeah. And we're like, that'd be great. We'll actually make more money over time. Yeah. Just no one went for it because the lot rent was so big. They kept doing the math and they're like, dude, this is going to be like a $2,000 a month payment. Might as well go buy a house, which I'm like, well, good luck buying a house. But for that amount down, and interest rates didn't help either, just being higher, which we knew that walking into it, but,
bummer.
Yeah, not great. So, but now whenever someone asks me like, hey, tell me about your worst deal. I'm like, this is it. Where I thought I bought something that was a no-brainer.
Yeah, it was a steal.
And
you're going to flip it quick. And
it wasn't. We thought about just renting it out. Was another one. We listed it for rent. But again, like it would have to be someone who was older. Yeah. And they just.
Well, and you're like the rent is going to have to be more than the $1,200
well, and that was our
lot fee.
In that area, rents are more than that. They're like for a 2-bed, 2-bath, essentially a house. Yeah. Like, no, you could rent it for like almost like $18,000. Like it would have been, which we would have been like, awesome. Let's make a deal.
They would have had to hit the age parameters.
They would have had to have been 55 and above. And there's a slight wrinkle of like, am I even allowed to own it as someone who's under 55? Like it was really weird. But we're like, let's do a lease to own. Yeah. We're like, let's do that. And no one.
Yeah, you were willing to be very creative and
Yeah, because it was
outside
like
the box.
every single month I was writing this $1,200 check. I was just like, oh,
This is so frustrating.
because I was like, I don't care. Like if someone's paying that, I'll hold on to it for a whole bunch of years. Cool, whatever.
Right. Well, yeah, because if they're making that payment and you're making even a little bit of profit, that's better than nothing.
Yeah.
So
yeah.
Where do you think you got off on the ARV? You know, I'm guessing you used comparisons of like stuff that was selling.
Yeah. In that park.
Yeah.
So strange. I think the issue is finding the buyers. That was like that was the big thing.
So how could you find buyers better?
Yeah.
I mean,
which honestly, it's a lot of people who are moving out of the area, moving in are a lot of the best buyers. Yeah. That was something we never solved.
Interesting.
Which I think we were like, oh, we'll just list it and it'll be great. It'll get sold just like everything else. And and there was a big slowdown that happened in transaction volume as well around that springtime. Like you could see it in the data where you're like, oh, something's going on here.
Yeah.
And so we got caught in the middle of that as well.
Bummer.
Yeah.
Which sometimes you don't know that's going to come up.
That's part of the bet.
Sometimes you can
that's the
see
risk
those
of a
trends
flip.
that are coming up, but other times it's like, well, that was weird.
Yeah. Yeah. So that
There you go.
so that happened.
You spent $1, but you lost 14,000.
Yeah. Which we had profits from another flip that we put into it.
Yeah.
And so that was essentially, we were just like, well,
Just a wash.
Undid half of that flip profit. Yeah.
You learned,
it happens. I did learn. Yeah. So we got into the future. We were like, okay, whatever we think is the ARV for a manufactured home, like we essentially we're going to cut it in half. Which is probably not, which ultimately has made us so conservative, no one's wanted to sell to us.
Sure.
Because when we set it at that number,
it doesn't make sense.
That means our buy number is like a quarter.
Yeah.
And most people aren't that desperate, which is, I'm like, cool, I don't want to buy it. This was a really bad experience.
Which, I mean, if another deal came up for $1, you now would adjust your ARV to be lower and maybe it would work out. But
yes, which actually there was another one in that park that came out for $1 that we passed on. And part of it was we had now had all the experience of doing the repairs. And we were like, that one was like a significant, there's a lot more work that would have to happen. And so we were like, man, this is like at least a $40,000, $50,000 job.
Yeah.
And we already knew that it wasn't going to get that.
It wasn't going to sell for that.
Even in our inflated thought of what it was. So we were like, nah, not worth it.
Yeah.
Ended up selling it to another guy who's doing all the work himself. So it's just a material cost. And hopefully it's got a better yard. It actually has a private.
Is he going to keep it or is he going to
No, he's going to flip it. But it's got actually a private yard area, which is nice. It's a better property overall. I think it's slightly bigger, maybe not. But,
interesting.
Yeah, man, lost it. Super, super lame. But hasn't stopped me from looking at other places.
That's right.
We're getting another place under contract. It's a 6-unit place. I haven't even told you about it yet. But that's one where we are buying it for like half the market value, which is good. But it needs.
There's a quote. The deal of a lifetime comes once a week.
Yes.
You just keep
Adolphe de Ruse. Yeah, that's the. I figured just keep taking shots, but man, it stinks.
It is. Yeah.
So, yeah, I think those are the rules I've learned. A lot more conservative underwriting for those. I don't even really want them. So that's essentially my way of saying no. And those holding costs, man, they can add up real quick. And gotta make sure you get your contractors on board.
Yeah.
Too.
Okay. That was like the last thought. As you said that, I was like, I feel like maybe you could have done something different with the contractor to light a fire under them and just be like, here's the timeline. Like you got to be done by this point.
Yeah, we've been good about setting budgets
with
our contractors, but and it's you get 3 choices, right? You when you're talking with the contractor, you can either talk about the quality of the work, the cost of the work, or the time of the work, and it's kind of like pick 2.
Yeah,
it's usually how that works. And so we've gone for we want this quality and we want this budget. Like this is what we want done for this amount. And so we've usually given up on the time.
Yeah.
And honestly, usually what we say is like, hey, we want to make this as nice as possible for this amount of money.
Sure. What
can we do? And we all kind of lock in on that.
Well, and if you don't have holding costs, then.
Honestly, my real goal is to eventually hire someone to maybe not do all of the projects, but to constantly keep it moving forward. There were weeks where there was just nobody there.
Because they were
and it was
on other stuff.
Super frustrating to drive by and be like, dude, we're not making any progress.
Yeah.
And so, and I mean, the thing, it's not hard, like painting lane flooring, it's easy.
Yeah.
The bathroom was legitimately a different thing.
Yeah.
But yeah, that's a change that eventually I want to make. And I think for this other project we're going to work on, that is a change that we will make, and that's okay. So yeah, anyways,
All right.
There you go. That's how to lose $14,000 by investing in a property for $1, which I know it wasn't just $1. We put 25 grand into it, plus all the holding costs, which obviously is how we end up losing money.
Yeah.
But yeah, man, those are my lessons learned. It stinks. I don't want to dwell on it anymore. So with that, I'm going to call it.
Moving on.
Moving on. It's all good, I guess. So yeah, thanks for listening. Hopefully you feel for me. It happens. Man, hate it. But it's all good. What is it? Moneyball. Billy Beane, he talks about, like, he's talking to the guys where he goes, I hate losing. I hate losing more than I like winning. And there's a difference. I'm like, dude,
It's
100%.
true.
Like, I felt that. So that's how I feel about this investment. But anyways, there it is. If you want to learn more about me and take a chance, I don't know if this is a good pitch.
This episode isn't really selling you.
It's all good. Not a manufactured home. It's all good. We got other stuff. Those ARVs are a lot more accurate. Things move a lot better for that one. You can check us out at furlo.com and just learn more about the other positive projects that we're working on.
Yes.
Thanks for listening. Have a great day.